Howdy, everyone. Welcome to Liberty Call. Today is Wednesday, January 31st, 2024. Hope everybody's having a good day out there. It's a little overcast here in Colorado, not quite as sunny and blue as normal, but we'll still take it. No snow today, but we're probably going to get some snow on Friday and Saturday. So, woohoo, exciting. You see my boy Jake back here is very, very excited. So, anyways, if it is your first time watching Liberty Call, if you would do me a favor, give me some thumbs up, like, share, subscribe, follows, and press the notification bell. Market did not react very well to the Fed announcement today, so let's go ahead and get into the the indexes and see how they turned out. Dow Jones finished the day down 0.82%, 317 points, closed at 38,150. S&P 500 was down 1.62%. It was in the red most of the day. Closed at 48.45. NASDAQ down 2.23%, closed at 15,164. And actually, let me zoom out here. We can look at the chart here. This is the Dow today. You can see it was pretty much hugging the the open close line, and then as soon as the announcement occurred, whoop, went down. Same thing with the NASDAQ. It was in the red most of the day. Spiked up a little bit and then dropped after the Fed announcement, and same thing with the S&P 500. So pretty interesting there. All right, let's get back to the numbers. The VIX was up 7.81% today. It's up to 1435. Canada was down 0.97. Brazil was up 0.55, and Mexico down a third. Over in Europe, Germany was down 0.4, the UK down 0.47%, France down 0.27%. The Netherlands down 0.3, Spain up 0.38%, Italy up 0.4%, Switzerland down 0.96%, and Portugal up 0.48%. Russian exchanges both in the green today. The MOEX up 0.67, the RTSI up 0.35%. And the overnights, the Nikkei in Japan was up 0.57%, Australia up 1.06%, New Zealand up 0.44%. In China, the Shanghai, New Zealand was down 0.44%. Easy for me to say. The Shanghai was down 1.48%. The Shenzhen Component down 1.95%. The China 50 down 0.08%. DJ Shanghai down 1.71%. Hang Seng down 1.39%. And the Taiwan weighted appears to have been closed. All right. So like I said, it looks like, for the people that were praying and hoping that the Fed was going to, telegraph or send smoke signals out to everyone that, hey, we're going to lower rates maybe at the next meeting in March. But from what I gathered from the little snippets I saw on the television and the little chyrons across the bottom is that they're holding steady for now until things get, certainly get worse. So, all right, let's go ahead and move over to today's market recap. U.S. stocks deepen losses as Fed signals no rush to cut rates. All right, on Wednesday, U.S. stocks experienced mixed performance influenced by the Federal Reserve's indication that there was no urgency for imminent rate cuts. The tech-led sell-off intensified after Google and Microsoft reported underwhelming results. The Fed's statement mentioned that it does not anticipate reducing the target rate until it gains greater confidence in inflation sustainability, moving towards the 2% target. Federal Reserve Chairman Jerome Powell added that a rate cut was unlikely at the March meeting, emphasizing that future decisions would depend on incoming data. Despite the less dovish tone of the Fed's statement, Treasury yields remained in the red, with the two-year Treasury yield falling 9.3 basis points to 4.262%. The ADP National Employment Report revealed the addition of 107,000 jobs to private payrolls in January, slightly below expectations. 107,000 jobs doesn't sound like a lot. Alphabet's shares declined over 6%, impacting the NASDAQ following the company's announcement that spending would be notably larger in 2024, particularly for expanding its AI offerings in advertising and cloud services. Tesla's stock fluctuated between gains and losses, but ultimately fell 1% after a Delaware judge rejected CEO Elon Musk's $55.8 billion Tesla package, stating that such a substantial award was unfair to shareholders. If upheld, Musk could lose options to more than 303 million Tesla shares, equivalent to about 10% of the company. That seems fair. Let's see here. Finishing up, Boeing stock, however, received a 4%, rose over 4% after the aircraft manufacturer postponed the release of its 2024 financial forecast. CEO Dave Calhoun acknowledged the need to regain confidence from regulators and passengers following a recent mid-air door plug breach. Overall, the mixed market performance reflected the impact of the Fed's statements and corporate earnings reports. So yeah, pretty much all the news today was the Fed. I mean, it was, looking for articles to cover today was like, there's nothing out here other than Fed news and other, other than that, it was pretty dry. All right, let's go a little deeper into the Fed stuff. Fed leaves rates unchanged, but signals no rush to cut amid elevated inflation. The Federal Reserve decided to maintain unchanged interest rates, signaling no urgency to cut rates until there's greater confidence that inflation is moving sustainably towards the 2% target. The Fed's monetary policy, statement emphasized the need for confidence in inflation slowing down before considering a rate reduction. Federal Reserve Chairman Powell further dampened expectations. Excuse me, got something stuck in my throat. All right, where were we? The Fed's monetary policy statement emphasized the need for confidence in inflation slowing down before considering a rate reduction. Federal Reserve Chairman Jerome Powell further dampened expectations of a March rate cut, stating that the committee would likely not have gained sufficient confidence by then. The odds of a March rate cut decreased to approximately 47%, down from around 65% before the statement. The Fed's stance indicated a shift to a less hawkish position, removing prior references to additional policy firming, end quote, present in the December statement. While the Fed kept its benchmark rate in the range of 5.25 to 5.5, the statement acknowledged that risks to achieving employment and inflation goals are moving into better balance. This decision marks the fifth consecutive meeting in which the Fed maintained steady monetary policy. Recent economic data indicating slowing inflation alongside a robust labor market has fueled expectations of a soft landing, achieving the 2% inflation target without causing a significant increase in unemployment. I will believe it when I see it, folks. The Fed's acknowledgement of risks moving into better balance suggests a more optimistic view, aligning with the possibility of a soft landing. The latest reading on core personal consumption expenditures prices, the Fed's preferred inflation measure, showed a drop below 3% on an annualized basis in December for the first time since April of 21. While the Fed welcomed the inflation slowdown over the past year, it recognized that the pace remains elevated, and that's in quotes. Morgan Stanley noted that the Fed's statement was in line with expectations, indicating a shift towards a more neutral stance, and maintained its expectation of the first rate cut in June. All right, so June would be 1, 2, 3 meetings from now. All right, so yeah, I just, my own personal hypothesis, I've said this a number of times, is I think the Fed's probably going to wait for some catastrophe or something so they can be the hero. If they just lower rates when nothing significant is going on, and then something bad happens, then everyone's going to point to them and say, see what you did, even if, granted, they probably had no effect on it. But all right, one last article here. I said, like I said earlier, it's pretty dry as far as news out there. So this is just some food for thought. This comes from Zero Hedge. It's titled "Trillion Spin on Climate Change Based on Faulty Temperature Data, Climate Experts Say." All right. Despite global spending on climate-related projects reaching an average of $1.3 trillion per year in 21 and 22, more than doubling the spending rate in 19 and 20, and significantly up from $364 billion per year in 2011 and 2012, there are increasing doubts about the accuracy of temperature readings used to justify such expenditures. NASA reported that 2023 was the hottest year on record, with the Earth's average temperature being 1.35 degrees Celsius above the pre-industrial average. However, a growing number of climate scientists argue that the temperature readings are faulty and that trillions of dollars spent are based on a problem that may not exist. My issue with this, stepping away from the article, is that how do we know what pre-industrial levels were? Because, you're not, it's not an apples to apples comparison. You're comparing data from people who recorded the information, 150 years ago, but how accurate was it? And, is it in the same place? And this article goes into, quite a bit of, reasons behind that. But anyways, all right, let's dive back in here. More than 90% of the National Oceanic and Atmospheric Administrations, or NOAA, Temperature monitoring stations have a heat bias, according to meteorologist Anthony Watts, making the methods used by NOAA to reduce bias ineffective. The urban heat island effect, where areas with more buildings and infrastructure experience higher temperatures, is a significant source of bias. Additionally, faulty transient temperature readings can provide inaccurate short-term temperature changes. Watts and his team revisited many temperature stations in 2022, finding that approximately 96% of NOAA's temperature stations failed to meet its own standards. Despite NOAA's acknowledgement of the problems with the U.S. temperature record and claims of data adjustment, Watts believes that the biases are impossible to overcome, impacting 96% of service stations. This raises questions about the reliability of temperature data used to assess global warming and make policy decisions. The accuracy of climate models used for energy policy decisions is also questioned, with meteorologist Roy Spencer pointing out spurious warming effects due to urban heat island. The debate over the reliability of temperature readings and climate data is likely to impact the ongoing global efforts to combat climate change. So, like I said, just some interesting reading. There's a link in the article down here that takes you to, I think, Epic Times, which is a little bit longer. But like I said, I am curious about it. Everyone likes to freak out over every little thing, whether or not it's, this is getting too hot, or there's too many storms, or it's snowing too much, and it's like, I don't know. I mean, here in Colorado, we finally are out of drought after, most of the time I've lived here after the last 12 months. I mean, we had a huge snowfall last season a year ago, and then we got a ton of rain over the springtime. And I think the whole state is out of drought, which is, hey, good news. But, it doesn't stop the doomers and tree huggers from freaking out over every little thing. So anyways, all right. Well, that's everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. I'm sure there'll be more information about the Fed tomorrow. People have some time to digest what Chairman Powell had to say, and I'm sure we'll have more news on that. So again, hope everyone has a wonderful evening, and I shall talk to you next time. Adios.